Welcome to Trading Lounge and the global indices, and starting with the SP500 on the weekly chart. Just to point out the bigger picture of things here. So we're looking at intermediate wave 1 and 2 here, and moving up into intermediate wave 3 here, with 5 waves of minor degree here of 1 and 2 and 3 and 4 and 5 here for that. And so we'll end up over the 5,000 with this. And yeah, as I've mentioned before, a lot of folks will be looking at this as the top of a market here as wave 3, 4 and 5. And I understand that the other side of the coin is tech stocks, and also banking stocks as well would leave this as wave 1 and 2. So there's a good case for that, but we will work through that problem as we work through this particular correction. Our current focus is this wave 4 correction here at the moment. So let's go in and have a closer look at that and how far we can expect it to pull back and so on. So technically, we can look at the wave 2 to the wave 3 here, and the 38.2% is at the wave close to the wave 4 of 1 lesser degree. So that's always a starting point. At that point, we also understand that when you're in third waves like this, they don't always pull back to where you would like them to pull back to, so they can always be a little bit higher. So if we take this one here, this little wave 4, it was just below the 23%, so it didn't pull back to its target either. So we had a bit of a chat yesterday about this, and we thought the 4-4 was a nice area, the top of these tops here, and also a couple of other reasons as well, which we can go into later or not. The other point here too is that we can see the indicator here, the stochastics. It's running pretty quickly on these numbers here, but just tuned it in a bit faster for the market. So it is giving that that lift there. Now I've had a look at the volume on the S&P. We're not seeing increased volume to the upside. It is moving up, and we'll expect it to move higher, but it's not confirming with increasing volume over the previous move down at this point. So that's something that we'll keep a little bit of an eye on. So technically, we could put wave 4 here, or secondly, we could put wave 4 over here. It's not like this wave 4 has become a significant size yet, is it? Do you know what I mean? It's technically, I always kind of look for, you know, if I've got this wave 4 here, this is wave 4 of 1 smaller degree. So I would expect this one here to be bigger. It may be bigger, it's got a bit more sort of range in it, but it's not really 60% sort of bigger as things go. But yeah, so there is scope for it to pull down, and we just need to be a little bit mindful of that. So just moving into the 20k area here. We also talked about this particular top, which we'll go over again today. So we do have, if you looked at the SPY or the S&P 500 on the cash market, the physical SPX, then it does count quite nicely down as an A wave, a B wave, and a C wave here for that. And if we go, which we looked at yesterday as well, so let me just find that here. So this is the SPX on a 45-minute chart. The thing is that on the futures market, we've got this little area here as the top, but on the cash market and the SPY ETF, we've got this as the top. So it does make a nice A wave and A, B, C for the B wave here, then 1 and 2. And then from that little top here as 1 and 2, 3, 4, 5 to the third, fourth and fifth. This has pulled up 50% rather than 40%. Is that a big deal? No, I don't think so. It's all right. So look, as far as the crow flies, we could have a wave 4 in, and we could be moving higher up here for this. All I'm saying is that this whole correction is a little bit small, and we need to be a little bit careful. If it was going to fail on the way up, then we could view it as taking the top and the bottom here, just roughly speaking. So we can look at the 50-60% retracement level area in here for that. So that would be the 50% here. So if it was going to fail, that's the box or space that it would fail in. So we could say that it would sort of test these old highs here for this, you know. And we could probably also use 45.50 here. So that's not giving me a line. We'll go back and have another crack at that. Okay, so it's kind of in the middle of all of that, isn't it? And the reason I'm putting that in there for is that you can trade long at the moment. In this, we'll have a look at this in a bit of detail, this move here. But one would say that if it's going to fail, this is where the supply is, and this is basically, it wouldn't find that number 45.50 as support. But if it did find that as support, let's just say that it went up here and it got pulled back, or maybe pulled back from this high and so on. But if we got a classic trading levels pattern on this level here, that means we can go long from that second high here, or if you can count 5 waves up here and all that sort of stuff. So we'd be looking for classic trading levels pattern at the 45.50 at that point. So yeah, that would be a nice place. So in the meantime, you can trade long here. I would suggest getting out before this top and then just chill and wait for this to become the support over here, waiting for the first high above the level first, and then going long above that or dropping it down to the second high, that type of thing. Because yeah, that's where it's gonna, you know, if it's gonna fail, this is where it's gonna fail from, and we'll have another leg down at that point. There's a good case for having a leg down here when you look at some of the other markets, some of the European markets, the DAX, even the euro dollar, and so on. So can we count this down as 5 waves, as 1 and 2 and 3 and 4 and 5? Yeah, it's doable, but wave 4 overlaps wave 1. It did rise up 50%. It looks like it had a bit of a new spike there, so I can sort of live with that a little bit. Yeah, so I mean, as a wave 4, there's a dozen different types of corrections in Elliott and thereabouts. So they can all happen in wave 4. So we could look at this as an ABC down here just for the A wave. We could put the wave C over here and just still have that as a wave A here and a B wave over here. We could WXY it. We could count it as 5 waves down for the A wave and then a B wave and a C. So I think we'll just wait to see what we've got over here. We talked about this yesterday, about having a bit of a low in there, and we'll need to work that. There is a good case for the tech stocks to move up here, and also the banking stocks as well. So if we have a look at just the finance sector here, this particular correction for the ETF here, XLF here, that here will be pushing up here higher. So the banking sector will push higher. And if we look at we'll look at the Nasdaq in a moment, but we've just been using this sector chart here. So Alessio is going to start, when we move over to the new site, he'll start doing 10 odd sectors, just daily charts once a week, and update them if need be. And the reason we'll do that for is because we want to keep an eye on the sectors to see what sectors are running, so we can get the best trades. We can see a nice little ABC pattern down here, pull back to 38.2% for, you know, the tech stocks here. The stochastics on normal mode here are running quite well at this point. So are we going to see a turn up here? That's what we kind of need to see on the Nasdaq, and we need to talk about that on the Nasdaq. There are some stocks that are sitting low down here, such as Microsoft. You know, it's got wave 3 here, and we're looking for one more low to come in here to finish this off. It's kind of partner in crime. Google here is got wave 1 here and 2, so it's leading to the upside. So it's like the banks coming out of wave 4. It's moving to the upside. Apple's a little bit like Microsoft in all of that. So it's a bit of a different bunch. The tech stocks are all a little bit of a different bunch at the moment, but they're in their later stages, and we'll be looking for trades in those things. So this is probably the count, right? It's just that there are some problems that, you know, as I mentioned, that It hasn't pulled back to the, you know, wave 4 of 1 lesser degree. We could end up with a situation where we could have it like this and then back again here like this. That's all doable as well. You just don't want to overtrade until we can see a nice clean impulse wave here. Now that said, we are getting a bit of a build. Don't have an impulse wave here yet, but it's building in such that it does need to move up further. And yeah, I mean, I could look at different counts and show you that, but it can be counted down as 1, 2, 3, 4, 5 here, and then an ABC up here, and then down again. So we do need to be careful. But the stocks are telling me, the tech stocks and the stocks are telling me that we should be moving up from here. So I'm just sort of left with, well, it's a pretty small wave forward at this point. So I'm just sort of, you know, going, I wonder what, you know, what's going to come of that. Is it going to be that simple, or is it just going to double in size? So support on the 45.50 would help us. And the time the market gets up to the 45.50, we'll see more of this structure here tomorrow, and we'll get a bit better idea of the volume in there. But I won't go, I've got other counts in here, but I'll just go to the 100 ticks, because I just want to sort of look at this little move in here, and we'll see what it does in the Asian session as well. Yeah, this little move here. The other markets around the world have got this too, this particular pattern here, the DAX, the FTSE, the Australian market, but in those cases it looks a little bit more corrective, but I think we could sort of lay on this. So we could view this up here as wave 1 here with 1, 2, 3, 4, 5 up here, an ABC pattern here, then 1, 2, 3, 4, 5 up here for 1, ABC back here for 2, up for 1, back for 2. So I'm definitely seeing this is building, you know. So if I was going to trade this long here, you see how it sort of migrated from being resistance and had the battle went on here, and then see how nicely it touched over here. It's a very subtle thing, but it's always worth noting, and the one over here as well. Because they really make good entry points. It's telling you at that point, see how it's just touched here and just touched over here? It's just the light touch, and it's just telling you that it's ready to go at that point, you know. It's like triangle patterns, you know, they'll be, you know, they're just diminishing into a particular point here, and the volume will be decreasing at that point. It doesn't take a lot to actually move it at that point. Well, they normally break before the actual triangle point, but the triangle point is always, the apex is always good to get a high over here too for that. Why I'm just shooting the breeze and waffling on. Okay, so yeah, so we're seeing this building pattern here. So yeah, anyway, that should, based on this 1, 2, 1, 2, 1, 2, blah blah blah, it should continue to the upside. So we can cruise up until we get to this 50-60% retracement level at the 45.50. So getting out at the 50 or just before it, and or take some money off the table anyway, and then we'll just wait for a classic trading levels pattern at that level. Wait for the first high above the level and work it from that point. So I'll leave that at that. I can run through that count on the SPY here for the others. So the A wave, the B wave here, then down for 1, back for 2, 1, 2, 3, 4, 5 for 1 and 2, 1 and 2, 3, 4, 5, third, fourth, 1, 2, 3, 4, 5 for third, fourth and fifth here. So that's how it works here, only on the 450. So yeah, up here is going to be a little bit tricky coming into supply. The volume's been pretty good, but and I'm just looking at that on Trading View, but I don't know if they sort of put all their volume. I still got to check on that. Unless you're paying for I mean, I pay for Trading View, but I mean, if you're not paying for managed data, then, and you're relying on free data, you've got to kind of be a little bit mindful of that. But mind you, companies like Yahoo and Verizon now, isn't it, do a pretty good job of giving free data. I'm very grateful for that. The Nasdaq. Okay, so this is the correction, the A wave, the ABC for the A, the B, the C here for this, and then we're coming down here. Now, as I said on the stocks video this morning, that that this is a CFD product, so it follows the futures contracts. It's just my little doggy, Minky. What's up, buddy? You just woke up, have you? Okay, so Yeah, I just want to talk about this for a moment, this low here, because we can put wave 4 here as well, and but the cash market has got this further down here, got a cleaner low on here, so I just want to go over that for a moment. I think he's a bit annoyed that I woke him up. So the Nasdaq here, yeah, so this, let me just clean my mess up here. So you can see this move down. This is on a 2-minute chart. So you can see this move down through here that's the low here. And we could also look at this as wave 1 here with a little ABC for wave 2 here and then continuing up. So it does make the low here on the cash market. That's not the low on the futures market. That seems to be CFD futures. That can also be the low there, and that's the low over that one. I've checked that out as well. So yeah, it does give us that the same type of thing. So, but anyway, the main gist of all it, I mean, this is a nice, quite a nice, decent sized correction here, but we still need to be careful about wave 4s. That they can be, you can have a bad dream, but you can also have nightmares as well with these things. So it's possible, I already got it over here, so it's possible to get another move over here for this, so we just need to be a little bit careful and all that sort of stuff. This is the supply up here, obviously, and just put that there for a moment and just put that in here. So it's in this area here that the problem's really going to start, So we'll just see what we get in this particular space, but we should see lift off from here. And as I said, there's lots of stocks that need to lift up from that point. And yeah, but I think we're good. I think we're good to go, really. We just got one, one obstacle in the way, really, that wave 4s can double in size. So we need to be mindful of that. And yeah, because there's products like the DAX that have kind of got 5 waves down, and the euro dollar's got 5 waves down, and those sort of things. So we just need to be a little bit careful about that. Just the Dow Jones here, 1 and 2, 1 and 2, 1 and 2, 3 here. So it looks like wave 4. The stochastics coming in nicely here. Yeah, so that's all good. George Lane, who created the stochastics, was an Elliott wave trader, and he used to help them for just using turning points. So yeah, that should be that. I mean, it's the same thing here. I mean, too, we could get another little move down here. I haven't investigated the Dow here that much, but just keeping a bit of an idea on it. But look, it's basically moving. It's basically moving with the banks. So the banks are pushing up in that point here. So here's the banks here. So that'll be much the same, different wave 4 here, but an ABC 1 and 2 and 1 2 yada yada yada. So more to move up there for that. And we come over to the Russell here. So this is the ETF. So this is a little bit different here, and this kind of opens up the bearish scene a little bit more here, because we can see here that we've got one, well, it's a bit gappy, but 1 2 3 4 5 here. So we've actually got 5 waves down here, and then we've got 3 waves here. So as far as the crow flies, I think that's 5 waves here. If that top there is breached, right, if that is breached, and probably will be breached, then I will need to bring this down to here, and then look at this as the A wave over here and the C wave over here for this, and then come down. So this one here, so this can, and this is why the other guys, the S&P and the Nasdaq can come down too, So we could come down like this. So some of the weaker stocks like Tesla, not good earnings, Netflix, the ones that we track, not good earnings, they're the ones that are likely to sort of pull this down. And it's not like Microsoft has, confirmed a low in place at this point. So the other side to this is I could put you know, wave C here as some sort of ending thing as well. I'm just saying, we've got 5 waves here. We could have a B wave and a C wave just here. You know, that could work as 1, 2, 3, 4, 5, and got the low in here. So we'll just have to be mindful of the 50-60% retracement level on these as well. So that's just these. I'll just thin that out to the little 65-62% pocket area there. So we could say that whatever level this is here, 196, we could say if the 196 becomes a tested support, we're good to go at that point. But you'd only trade up to this number here and get out anyway. So, but that's the, you know, that's a nice clean picture on the ETF, and this is the other one here. So the CFD that a lot of folks trade. So it would be the 1, 2, 3, 4, 5 here. I could do other tricks with this and call a low in here, but here you can see that it's like very much 3 waves here, isn't it? You know, I mean, I could put a B wave here and then a C wave here. I could do that. I could go an A wave to here, then an A, B, C, D, and E here for that, and then just bring that in over here. But I don't know. I don't know what the right count is, you know. All I'm saying is that there's danger. There's danger at this point. You know, that's the thing. And we just need to be triply careful with wave 4s. That's all I can say at this point. Okay, so this is over to the European markets, and this is the DAX here. So with the DAX, and a bit like the euro dollar as well, you can get an A and a B and a C wave out of this and have a low in place here. I understand that, but you can also count 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. So you can count the whole thing as 5 waves down, and you can come back to here, and then you can come back down here. I'm looking at this wave 4 here for the bit. It's all a bit weird up here, but yeah, so it's quite possible to, you know, make a move up here and then come down again, and then move up here for the wave 4s, you know. So it's just a little bit, you know, it's possible to put that in here. I understand that, you know, and it'll only be hindsight that will tell you the answer. All I can say is that we should be climbing higher, but there is problems on the horizon. You know, as soon as you see this, the lower, well, you're at 16 now, so that's an issue. And if you can climb on top of that, you're going to get, you can see all the supply here. So 100 and 200, you know, they're going to be the real issues at this point, you know. So we just have to be a little bit careful about all of this, that's all. So this can also come through to the FTSE as well. So with the FTSE, I'm looking at this here as wave A here, wave B here, and wave C here for wave 2, and then looking up as wave 1 here. It also appears to be 5 waves down here. I could wingle it some other particular way, I understand that, but while you can count it as 5 waves, I have to respect that as well. So it can also fail at the 76 area here, 76, 10, 15, 20 here for this. We should climb higher, and we'll probably end up being bullish, but this is a problem here based on this possible 1, 2, 3, 4, 5 here. Okay, so we could end up with a wave 2 over here, because I see it quite often where it comes down to the 50%, goes up, and then comes down to the 61.8%, you know, even though it's already sort of been here. So we do need to be a little bit careful. I don't have the answers for this, you know. I mean, I can wingle a 5 wave move to here as 1 and 2 here, and 1 ABC for 2 here. So, you know, it can build up further. It doesn't have to stop at the 50-60%. It might be 76.50 where the supply is, and also the beginning of group 2 at that point, 65, 72, and 80, which are the main levels at that point, you know. So all I can say is that, yes, we will be going up, but how far, you know, I'll look at the count tomorrow. So you can be long, but for how long is the question, you know. So we've got work to do. We've got hurdles to jump and things to look at and talk about. And this will also be the same for the Australian market as well. So we've got 2 counts for the Australian market. One of them, I still can't rule this one out, is just simple back down to here somewhere. and then up at that point. That's that would just not that far up. Sorry, that would just take me over to here, to the D wave here. So a much larger triangle sort of pattern. The other pattern is this wave E here for the triangle is actually sitting over here for that. So that's also a possibility. We've got the stochastics pulling down on the daily here, as you can see. So kind of looking to sort of pop to the upside. So that would be in line with our bullish count on the intraday here at 20,000 ticks, which is looking at, didn't mean to move that line, but it doesn't really matter. Yeah, a triangle pattern down to this point here, and then wave 1 here and 2 here and 1 here and 2 here. And this 1 here and 2 here and 1 here and 2 here, that would bring it in line with the US markets. And as I mentioned yesterday, this pattern in here is very much like the Dow Jones pattern. Also 1 and 2, 1 and 2, but the Dow has moved up here further. Well, the ETF is in the ETF has moved up even higher, but the Dow's caught up a little bit now that the banks are sort of cruising along. So yeah, this can be bullish, and we do have 3 waves down here at this point. So you know, it's a different count than the US markets is the 3 and 4. So do we just go straight up from this point here? I don't know. I mean, we could do. Normally what I normally do is just wait for some. When I've got 2 counts, I just go into the intraday and have a look at the evidence. So that particular move coming in off the low here, that's something that you know, we would look at with you know, the same as the US markets here. So this will be the pattern here, but it's not on the Australian market. It's not as clean and crisp here, because here I can easily count 5 waves up for 1 and 2 here, and 1 and 2 and 1 and 2. But on the Australian market, I find that very difficult to count it, a bit more difficult to count it as cleanly as this, you know. But I can see that this needs to move up. So that means the Australian market, you could use this count on the Australian market. That's kind of what I'm saying here. So from 20k ticks into 100 ticks. So we've been counting this here as the A wave, the B wave, and we could count this down as the C wave here. And like I said, this here doesn't count as not a pretty picture as the US market is. It's sort of completely different, but this low here takes this low out here. We can get 5 waves up here. This down here is counting corrective down here. This from here, that's 1, 2, 3, 4, 5 to here. Right, so then we've got, you know, we can't call that wave 1, 2, 3, 4, and 5 here. It doesn't really add up. So whichever way you want to count this move down here is bullish corrective. That means we should be taking out the top here. We could probably count this in a couple of different ways. We could probably put wave 1 here and wave 2 here just to bring it in line with the US markets in one way or another. We could do something like that and then start looking at this as wave 1 over here and 2 here. Certainly a building process to the upside. The top to the bottom here, that's the 61.8%. So I can see that it needs to go through that. So we will be going higher. There will be, you know, there will be a bit of a splat across this level here, I guess. And then we're hitting group 2 at this point. So group 2 is 65, 72 and 80 in here, but we're also hitting the 50-60% retracement level area here as well. So it's possible that we could just come up to here and fail at that point. So when we do get up here, then we'll just have to see what it looks like in the next session. I could look at this as corrective too, you know. I mean, I could look at this as an A, B, C here for the A wave, the B wave here, and the C wave here. That's what sort of haunts me a little bit, you know. So we have to get past all of this here, because it can just be interpreted in different ways. But with the US banks going up, this is the US bank. So our bank, well, I'll just say Commonwealth Bank, that's also pulled down, hasn't it? And it's at its lows at the moment. But now we're seeing the US banks pushing up, and the Goldmans and Morgans and all those sort of things. So our bank should push up now off the lows, right? So our bank should push up off the lows because it's, you know, it's come down hard like this. So they can, our banks will, if the US banks are pushing up and our banks are pushing up, well, then our banks are going to take this up. That's my logic. Okay. So I'll leave it all at that. So thanks for tuning in. Cheers.